Hey, are you subscribed yet? Can you be? Welcome to Amateur Investing. I have been working on this stupid screener video for so long. I didn't get anything uploaded last week. I got really busy. It's looking like it's not going to come out this week either. So I was thinking, man, I should make a video for this week so that YouTube doesn't hate me. So here I am in my car, the worst sliding ever, but let's go. I was thinking in my car, I was driving like this, and I was thinking, right? I do that sometimes. I was thinking about GameStop, and when I started investing, and I was thinking about how GameStop taught me a really bad habit that took a long time to break, that I'm worried a lot of people are following. And that habit is buying against the trend. So GameStop would do this thing where it would tank down X percent, usually double digits X percent, XX percent, and then it would climb up XX percent super quickly, back and forth, back and forth. So everyone who got into investing with GameStop, myself included, people who have no prior experience, they see that and they say, oh, the price just went down 30%. Now's a good time to buy, because that means it's about to go up another 30%. That's usually not the case. You should not buy against the trend. An object in motion tends to stay in motion. That's also the case with stocks. Richard, how do I not buy against the trend? Easy, use your moving averages. I like using EMA. Most people use SMA. Just stack up 2 or 3 at different time frames, different periods, and just make sure that you are above them on them all. I like using 20, 50, and 200 day SMA. I like using 20 and 50 period EMAs for shorter term things. So the idea is, if you have these moving averages all stacked up and the current price action is above those moving averages, you're probably in an upwards trend, because on both the short, medium, and long-term basis, you're going up, right? Bonus points if all 3 lines are going upwards. But generally, you want those also stacked in order of smallest to biggest. So you want the 20 period on top of the 50, you want the 50 period on top of the 200. That means you're in good company. GameStop taught me not to do that. GameStop taught me to lose a lot of money, and I've definitely lost a lot of money because of GameStop. So next time your meme investment is down for the 5th day in a row, and you're saying buy the dip, hey man, maybe don't buy the dip. Maybe wait. Maybe wait for it to go up a little bit, a lot of it, because right now it's trending down. That's the case for a lot of stocks, and I see a lot of people doing that. I'll see a stock that's been going down 10% a week for 3 weeks, and people say, I'm dollar cost averaging, I'm buying the dip, I'm getting my average basis down, and then it keeps going down. And what happens is, instead of losing a little bit of money, you're losing a lot of bit of money. Don't do that. Don't do that. I hope you learned something. I hope this video did something for you. It was cathartic for me. Thanks for watching. If you liked the video, like. If you hated, dislike, leave a comment and subscribe. Bye!